In terms of the yield differential between Japan and the US, what it's doing is a bit of a Canute affair, and it's not going to fix the problem until it frees Japanese rates from slavery and allows them to move up a little bit, move them up and down in line with global rates. So yeah, I mean, I think the government has been refusing to disclose whether they've been intervening or not, but I don't think many people have any doubts.
But many, in terms of, the BOJ minutes, were suggesting that, it should be market set rates that guide the JGBs. But is that even possible, realistically? And I'm not talking, effectively making it the same as, the FFR, because the fiscal cost would be absolutely significant in terms of interest payments. But how tolerant is the rate settings in Japan to the debt levels?
Oh, I think a lot of people get themselves very worried about the Japanese government debt. I think last fiscal year it paid, sort of 76 basis points. So think of it as a 10-year bond. The 10 years a little bit above that at the moment, but it's not the end of the world. Its interest payments are still pretty small. What you've got to understand is people who want to whip you up into a frenzy will talk about the gross debt of Japan, but it's also got a lot of assets. And so when you offset the one against the other, then the net debt is about half of the gross. But unless Japanese economy picks up pace considerably, I think the Ministry of Finance, in its planning budgeting for the coming year, uses about 1.5%, and that is it always factors in a lot of buffer. And so I don't think we're going above 150 basis points on the 10-year anytime soon.
Nicholas, what's your outlook on the exporters, and how much benefit do you think are they really getting from a weaker yen?
Yeah, if you look back and just run Japanese profits against the yen, going back over the long term, you can see that in the 70s and 80s, when Japan was much more yen sensitive, had much higher export ratios than it does now, actually strong yen went with strong corporate profits because the strong yen was reflecting how strong the global and therefore Japanese economy was. It's offshored a vast amount since the mid-90s, and at the moment is not very sensitive at all. But obviously that depends on how much your yen moves. And the yen was 109 to the dollar averaged in 2019, and now we're where are we? 156, give or take. And when I say give or take, I mean it's changing considerably every 10 minutes or so.